Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Let's get into today's analysis. We're looking at two key claims circulating within the currency community. First, reports suggesting that the Vietnamese dong has increased by a couple of dollars in certain exchange settings, with references to what some are calling redemption center rates. Second, the recurring narrative that a so-called contract rate for the Iraqi dinar has been tied to Iraq's per barrel oil price. As always, our responsibility here is to break this down carefully, separate verified economic fundamentals from speculation, and focus on what is realistic within the framework of global finance. Let's start with the Vietnamese dong and the idea of a sudden multi-dollar increase in rate. The official exchange rate of the Vietnamese dong is managed by the State Bank of Vietnam and is publicly available through international financial data providers. Major currencies do not move couple of dollars overnight without significant global economic shock, central bank intervention, or structural reform. In global foreign exchange markets, such a move would represent an extraordinary revaluation event that would be immediately reflected across interbank systems, international banks, and financial terminals worldwide. When we hear references to redemption center rates, it's important to clarify that there is no internationally recognized monetary framework where private redemption centers independently set exchange rates outside the established banking system. In every legitimate currency exchange process, rates are determined either by open market forces or by central bank policy. They are not privately negotiated in isolated facilities disconnected from the global financial system. Now, this brings us to the Iraqi dinar and the claim that a contract rate has been tied to the per barrel price of oil in Iraq. This is a very persistent theme within the dinar community, so let's examine it analytically. Iraq is indeed a heavily oil-dependent economy. The majority of government revenue comes from oil exports. Oil prices directly affect Iraq's fiscal budget, public spending capacity, and foreign reserve accumulation. When oil prices are strong, Iraq's dollar inflows increase. That strengthens the country's foreign currency reserves held by the Central Bank of Iraq. Those reserves are one of the key pillars supporting the stability of the Iraqi dinar. However, there is a critical distinction between oil influencing economic fundamentals and oil mechanically determining a currency's exchange rate. The Central Bank of Iraq, like other central banks, manages its exchange rate policy based on a wide range of factors: inflation control, foreign reserves, trade balance, liquidity conditions, monetary stability, and the overall macroeconomic framework. While oil revenue impacts those variables, there is no publicly verified mechanism that automatically links a per barrel oil price to a fixed contract rate. For private individuals, currencies are not priced the way commodities are. Oil has a per barrel market price. Currencies, on the other hand, reflect the relative value of one economy against another. Even in oil exporting countries, the exchange rate is not simply a formula of oil price multiplied by a certain factor. For the Iraqi dinar specifically, the exchange rate policy has historically been managed in a controlled band. In recent years, the Central Bank of Iraq adjusted the official rate in response to fiscal pressures and external currency dynamics. These decisions were publicly announced and implemented through the banking system, not through private contract arrangements. Now let's discuss what this means for Iraqi dinar followers in both the short term and long term. In the short term, Iraq's economic position is closely tied to oil market conditions. If global oil prices remain stable or elevated, Iraq benefits from stronger revenue inflows. That improves government budgeting capacity, infrastructure development, and foreign reserve buffers. A strong reserve position supports exchange rate stability and reduces the likelihood of sharp devaluations. Stability, however, does not automatically translate into sudden large-scale revaluations. Short-term currency movements, if they occur, are typically incremental and policy-driven. Any official change in the dinar's rate would be communicated through the Central Bank of Iraq and reflected immediately in international currency markets. It would not be selectively available through private channels. In the long term, the more significant factors for the Iraqi dinar's strength are structural reforms. These include diversifying the economy beyond oil, strengthening the private sector, modernizing the banking system, improving compliance with international financial standards, increasing transparency, and maintaining political stability. Iraq has made progress in some of these areas, particularly in digital banking reforms and strengthening financial compliance systems. Continued integration into the global financial system requires regulatory discipline, anti-money laundering enforcement, and cooperation with international financial institutions. These steps gradually enhance confidence in the currency over time. Oil revenue plays a supportive role in this transformation. Strong oil income allows Iraq to invest in infrastructure, stabilize public finances, and build reserves. But oil alone does not determine a fixed high exchange rate. In fact, central banks in resource-heavy economies often avoid sharp appreciation because it can harm export competitiveness and create economic imbalances. It is also important to understand that currency valuation is deeply connected to productivity and economic output. For a currency to sustain a significantly higher rate, the underlying economy must justify it through diversified production, stable governance, controlled inflation, and strong institutional credibility. Regarding the concept of contract rates, there has never been official confirmation from the Central Bank of Iraq, the U.S. Treasury, or major international banks that such a parallel rate structure exists for private currency holders. In established financial systems, exchange rates are transparent and publicly accessible. Multiple secret tiers of exchange rates for retail participants would undermine the integrity of global markets. For viewers following dinar developments, the key takeaway is this focus on measurable economic indicators. Watch Iraq's foreign reserve levels, inflation trends, oil revenue performance, fiscal budget execution, and central bank policy announcements. Those are real drivers of currency stability. Speculative reports about dramatic overnight increases or private redemption centers should always be approached with caution. In finance, extraordinary claims require extraordinary evidence, and credible changes in currency policy are always accompanied by official documentation and broad institutional transparency. That does not mean Iraq lacks potential. On the contrary, Iraq remains strategically positioned in the energy market. If oil prices remain favorable and reforms continue, the country's macroeconomic position can gradually strengthen. Over time, that could support a stable and possibly stronger dinar within realistic monetary frameworks. But strengthening in global finance is typically gradual, controlled, and policy-based. It is not sudden, isolated, or disconnected from official channels. As responsible analysts, we must separate enthusiasm from economic reality. Iraq's oil wealth is a foundation, not a shortcut formula for a guaranteed exchange rate outcome. And the Vietnamese dong, like any currency, operates within structured international monetary systems governed by central banks and global markets. For Iraqi dinar followers, patience, due diligence, and realistic expectations are essential. Currency markets reward discipline, not speculation driven by unverified narratives. We will continue monitoring official announcements, macroeconomic data, and credible institutional reports to provide balanced coverage grounded in real financial analysis. If you value responsible and factual Iraqi dinar updates, make sure to subscribe to the channel and stay connected for continued coverage. And as always, this content is for informational purposes only and should not be considered financial advice.